Imagine how it would feel if someone kept spying on you wherever you were. Creepy and scary at the same time, right? Obviously, who wants to be tracked down in all their daily activities? But what if I tell you that even if you are not being tracked, your money is still being seen? How would you feel about it? The transaction, the deposits. In short, no matter how much money you are spending or sending somewhere, will be tracked. Well, let me explain. Hello everyone, and welcome back to the Stealth Wealth Society. Today's video will definitely blow your mind. Make sure you've hit the like and subscribe buttons so I can bring more amazing content for you. Let's get started. This was a new law passed by Biden back in 2021 as a result of the American Rescue Plan Act of 2021. The former president, Mr. Joe Biden's $3.5 trillion budget reconciliation plan was one for all. The plan was to have a check on everything from Medicare to vehicles to electricity. He intended to work on all of it in this budget. But doubts and controversies arose when in the budget, it was written that more access and scrutiny would be given to the Internal Revenue Service over all the bank accounts. That was something new, and people were confused about what this exactly meant. Apparently, it was decided that the banks, credit unions, and other providers of financial services would be responsible for tracking down and submitting the information on the inflows and outflows of the accounts that possess a bank balance over $600. Now, this came as a total shock for all the Americans. It was said that the reports would include all the physical transactions throughout the year, any kind of foreign transactions, and also transactions between accounts owned by the same owner. The IRS would get a report on annual transactions rather than individuals. So if you have some kind of business or side hustle, or if you do some part-time jobs or use third-party payments platforms, for instance PayPal, Cash App, or maybe Venmo, then the IRS will remind you to report your payments of transactions of at least $600. This really put all the small businesses in shock. As for them, it was like invading privacy. Long before these rules were passed, there were different rules for all businesses, side hustlers, and part-time workers. Earlier, they only had to report gross payments if they exceeded $20,000. They were also supposed to report their earnings if they had more than 200 such transactions. This was kind of easy and reliable that way. But as soon as this new rule passed, things changed, and it became a difficult turn to take. You had to report your transactions once they exceeded $600, no matter how many transactions you had. But this rule change didn't mean that there were no taxes on these earnings earlier. There were, obviously, but now there was just a change in reports presentations. Don't mind the taxes, but this report presentation to the IRS is a struggle. And for me, it would have been uncomfortable too. I mean, who would want to give access to a second party to your accounts and bank statements? But Biden is for sure Biden, and he does what he wants to, and that's exactly what he did. When this rule passed, there was a buzz on the amount. People were not sure if $600 was the amount that they have to show their transactions for. But at the same time, some media reports were claiming that the amount may go up to $10,000 in annual transactions. The rule does not apply to private transactions like splitting the cost of a meal or a vehicle trip, giving gifts on special occasions like holidays or birthdays, or making a home payment to a relative or friend. A TPSO is mandated by law to keep track of third-party network transactions paid in 2022 with any cooperating payee that surpasses a minimum aggregate payment threshold of $600, regardless of the number of transactions, starting January 1, 2023. TPSO's issue of an IRS Form 1099-K, payment card, and third-party network transactions to each payee when these transactions take place. But as I told you earlier, there was a fuss and fight over the amount of the IRS, so there was an amendment made by the government over the amount. Under the revised plan, which is backed by the Biden administration, banks will be required to provide information on accounts with total yearly deposits or withdrawals of more than $10,000, as opposed to the $600 level that was initially proposed. Earners of wages and salaries and people who receive benefits from federal programs like Social Security would not be subject to the reporting requirement. The proposal was approved in the wake of persistent bank lobbying and storm of Republican opposition, who charged that the administration's ambition to strengthen the Internal Revenue Service in order to cover the $7 trillion tax gap represented an invasion of privacy and excessive government power. Banks are already required to share information on account deposits that surpass $10,000. They must also report the interest on consumer accounts worth more than $10. The proposed idea would give the agency even more visibility in determining whether any of the money is unreported revenue by comparing what an individual or organization declares as income to what is actually in their bank account. Well, when this law came, everyone had a different point of view about it. Some U.S. citizens were totally against this change. And on the other hand, some people were okay with this. Some program critics have falsely claimed that the IRS would keep track of information on specific transactions. However, the IRS won't be keeping an eye on specific customer transactions, the administration claims. Instead, it will use the account information to spot discrepancies between that information and what taxpayers reported on their tax returns. The lawmakers, financial advisors, banking groups, and Republicans in Congress have turned out to be the law's serious and vocal opponents. Legislators and financial organizations have claimed that lowering the threshold for account inflows and outflows to $600 would lead to a very bad mess, which would more likely affect regular Americans than individuals who evade taxes. But would it? That's something only time can tell. The banking groups are of a mindset that this excessive amount of tracking would do nothing but cause tension among small businesses. Excessive monitoring would subject banks to onerous regulatory duties and could reveal a plethora of private financial data. The Biden administration was also chastised for failing to explain why virtually every American should sacrifice their financial privacy to allow closer scrutiny of the top 1% of taxpayers. Well, this is just one side of the story. While several people are defying this law by saying that it is going to evade the privacy of the users, at the same time, some people are fully supporting this law and are ready to implement it in their lives. What a big move by them! The supporters of the law say that this does not require them to pay more taxes. It is just a reinforcement of the existing laws by the IRS. That is it. They say there is no need to create a fuss about it, as it is for our safety. Steve Wamhoff, Director of Federal Tax Policy at the Institute of Taxation and Economic Policy, says that I don't understand what the big deal about it is. I mean, Biden and the existing government are talking about enforcing the law, which is already there in the books. Also, let me tell you an interesting thing. In the American Constitution, there is no such rule to hide your income or your transactions from the IRS. No one has the right to do so. So only now Biden's government took this step to say it out loud, and people got mad. Well, if I was at their place, then I would have had the same reaction. Biden aims to get their hands on the rich and the richest so that the economy can get stabilized. The idea is part of a broader package of measures aimed at closing the so-called information gap, which refers to taxes that the government is unable to collect due to undeclared income. The richest 1% of taxpayers owe a huge amount of such delayed taxes, estimated to be $160 billion every year. Now, this is a huge amount, and if we look at it through this lens, then it's quite obvious to have such laws in the country. This discrepancy exists in part because, unlike low and middle-income employees, whose income comes from employment, gig labor, and savings accounts is reported annually in W-2s and Form 1099s, wealthy people are conscious that they typically have no one looking over their shoulders. Unlike employee income, which is nearly always declared, the Treasury estimates that only about half of firm income is declared. But at the same time, we have another issue in line. If there is proper monitoring done on all the withdrawals and deposits, then there will be a few obligations seen by the banks too. It won't be easy for them to keep up with this huge load of work. All of this additional transaction activity would need to be monitored and reported to the IRS by banks and other financial institutions. That can increase company expenses and make it necessary to charge clients more. Consumer Banks Group quite bluntly stated in a letter to congressional leaders that even if raw data of all consumers are readily available in the system, compiling and submitting it won't be a piece of cake. No doubt this proposal will boost the expense of tax preparation for both people and small businesses, as well as generate substantial privacy concerns regarding financial data, in addition to causing severe practical and branding difficulties for financial institutions. So there seems to be many hurdles in the process. As it was said that it would be implemented by January 2023, many of us are waiting to see the progress or destruction because no one knows what will happen. At one point, there are several advantages. However, at the same time, we will be seeing a huge number of negative impacts too. These are a few of the advantages that none of us can deny if this law successfully runs in the country. If bank transactions were tracked, the IRS would be able to identify irregularities in cash flow at high cash operations like restaurants, laundrettes, and small grocery stores. It could also reveal undisclosed money flows to employees who are typically paid under the table, such as nannies, repair workers, and day laborers. Now that seems like a good point, doesn't it? But some researchers are of a point that it won't be as easy as Biden has explained it to be. He may be able to catch small fish, but big fish won't come in his net. So now let's see what is going to happen. If this law becomes a successful one, then Biden will make his mark in history and win the hearts of millions. But if he fails to do so, it would be nothing but a nightmare for him. Well, peeps, this was it for today's video. I hope you liked the action-packed video. We would love to hear your thoughts about it. Feel free to comment down below.